Oh, BlackRock's terrible. They're
Right.
one of the worst players on Wall Street. They're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs.
We have been part of the huge revolution in investing through ETFs.
They own more, their ETFs own more stocks than there are stocks. And they charge a fee for that. And they have incredible political influence that they use to make it easier for them to game the system. They are really a plague on capitalism.
It just identifies how much money laundering there is being done in the world.
Today we have Bitcoin maximalist Max Keiser giving us an update on Bitcoin, the crypto market, and why BlackRock's Bitcoin ETF is not what you think. Keiser believes BlackRock is playing a much bigger role in 2024 than any other institutional investor. And while he maintains a bullish price prediction for Bitcoin, he discusses why this is unlike anything we've seen in history. Keiser points out a massive problem with the SEC's imminent approval of the BlackRock Bitcoin ETF application, and says investors are not prepared for what's coming. Bitcoin is currently sitting just above $43,600, up over $6,300 just in the last 30 days. Keiser discusses the collapse of the fiat money system around the world and points out that the dollar will be the last one to fall. This is where he says Bitcoin will actually show itself to be a true form of money without influence from inflation or government's continuous printing. Let's get right into the latest interview with Max Keiser as he gives us his Bitcoin price prediction and why BlackRock's game plan will actually blindside the crypto market. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
Wall Street makes their money and then they sell off bits and pieces, right? Companies go public and the insiders make tons of money, and then the public can buy shares in the aftermarket, and the feast has already happened and they can buy shares. But here in this case, the feast happened by the plebs, by the people who were marginally on of society buying Bitcoin when it was $1 and $5 and $10. Now you see Wall Street coming in. So it's really a reverse of what we've seen historically with markets, in that the little guy got there first and they've made a ton of money. And now Wall Street comes in and everyone's going to make a ton more money. So yeah, BlackRock and all these other firms, Fidelity, will launch ETFs, and it'll bring in a tremendous amount of capital. And the product itself, the Bitcoin ETF, is an inferior product to owning Bitcoin outright, just like the gold ETF is an inferior product owning the gold outright, because in the gold ETF, if there's a credit problem with the custodian bank and they go bankrupt for some reason, it says in the fine print that they can settle with you, the ETF owner, in cash. So you don't get gold for your gold ETF. You get paper money, which is the thing you're trying to avoid. Same thing with a Bitcoin ETF. It'll have contingencies in the prospectus that make it very much inferior to simply buying Bitcoin and putting it into cold storage and taking it out of the system. But nevertheless, it will unleash a lot of capital. And, we're going to get to a valuation of Bitcoin, which would be similar to gold. So gold is in the 10 trillion, approximately, market capitalization, the global gold stock that's traded. And Bitcoin is just under 1 trillion. So you're going to get a 10x on Bitcoin pretty quickly here. So you're talking 400,000 to compete with gold. I think we could get it on this move. You're going to get it definitely above 250,000 on this wave, on this move. Will we get to 400,000 on this without a correction? And Bitcoin is corrects pretty severely every few years. Possibly, we'll have to see how it develops. But I have a feeling that because the fiat money world is collapsing so rapidly, and the model of the nation state itself is collapsing, that we could be pretty shocked on the upside in terms of where Bitcoin is going. In dollar terms, the price of Bitcoin would go higher, right? If the dollar is going down, your dollar price in Bitcoin goes up. So we very happy to see the dollar go down. Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, as we see in Argentina and Venezuela and Turkey. In these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing. The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. But eventually it too will go this way of all fiat money. So fiat money is we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States. So this is all winding down. We're moving toward a post fiat money, post central bank, post nation state world.
Embracing an unyielding enthusiasm for the crypto realm, Keiser confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Keiser reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin.
Bitcoin is the fastest horse in the race. And, I'm looking at the numbers here myself, and I'm figuring for every dollar move in gold up, you're going to get $30 to $40 in Bitcoin. So, it's a supercharged way to play the collapse of the fiat money world, which includes the dollar. The dollar is really in jeopardy. The country, the United States, is printing money just to pay the interest on the debt, just the interest, right? So that's debt monetization in a debt spiral. And the GDP is not going to suddenly go up 50x to create enough tax revenue to pay down that debt. In fact, the GDP is shrinking. The amount of the dynamics are horrible. For the fundamentals of the US dollar are terrible. And everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world. And that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market. The global bond market it's still incredibly cheap relative to what you could call the total addressable market, TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And it's everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard.
The Bank of Japan historically central to global currency dynamics, is on the brink of default, which could precipitate a global economic downturn. Max foresees a looming economic catastrophe driven by collapsing fiat money systems, rampant inflation, and bank failures. He suggests that a transition to a Bitcoin standard might be on the horizon as the world grapples with the impending crisis. He asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Keiser says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Keiser presents two bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. What do you think about the latest interview with Max Keiser? And what are your thoughts on his prediction for Bitcoin heading into 2024? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.